Law. So it's a hearty welcome to all of you, man. I welcome Rekha ma'am. I welcome Rekha ma'am for joining this conference in a short notice, so that it will be very helpful for the students. If you have a few words with the students who joined over here. So I especially thank Sarada Deepti Garu for accepting our invitation to provide our knowledge to the students. So it will be very helpful for them in the coming examinations. So I also want to have a word with students that from SECASA perspective, we are handling so many programs, classes. I request all the students to join the classes and get benefit out of them. Apart from academics, we are also planning games and other career counseling programs for students. I also request them to participate in all the activities which are generated from SECASA Vijayawada. So by this, we'll start our conference with our motto song. So you need not stand. As a just self-respect, keep your hand on the heart. Okay. So
येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः शतः सर्वे तदूनाद्यतिकश्चन एतद्द्वैता
thank you all. So Vice Chairman Narendra Babu Garu has joined the conference as well. Welcome, sir.
Yes, sir.
So I take this opportunity.
Rekha ma'am also.
Yeah. So Rekha madam, please have few words for the benefit of students and for us also. Please, ma'am.
Thank you so much, sir. Actually, firstly, let me thank Shireen ma'am, Jayan sir, and Narendra Babu sir for inviting me to this. So, I actually was very, very happy to join because I don't know how many of you know, I'm a faculty for auditing and enterprise information systems and risk management. So this is something I always love to do with the students. So I can see a bunch of students here, and the examinations are around the corner. Just hardly 1.5 months you have. Not even 1.5. 1 month you can calculate as 1 month. So this is a time when you will be doing with your fast track revisions and crash and mock test papers. And just when I was telling about mock test papers, sir, is there a facility there for them to come and write the mock test papers?
Yeah, madam. We already conducted mock test series 1, and we are also scheduling for series 2 as well. So we are expecting good amount of people for series 2, madam, because series 1 is too early for them. Just results after results announced before 1 month only, series 1 has been started. We didn't get much response for that. We are expecting good response for series 2 mock test, madam, and we are also waiting for that schedule.
Yes, very, very good. Sir, and as sir has told, please make it a point to attempt your mock test paper. So the thing is, one of the areas where most of the students lose out is because of time management. Say the same paper, if they have given for 6 hours, I'm sure most of you would be able to pass. It's just the time management part which you have to work on, and secondly, how to write the answers. Say your exam should not be the first point where you go to write the exam and get a practice. Before that, at least 2 to 3 mock test papers you should have written, get it evaluated, and know whether your presentation is right or wrong, whether you are able to fit within the particular timeline. There is one thing I would like to say, and before you actually start with your preparations, I would ask each and every student to please go through the examiner's comments. So in your board of studies, if you go to Inter study material, there is something called as examiner's comments. So why I am telling this is most of the students won't even go to that particular area. There, each and every exam, whatever the institute is conducting, they would have analyzed the paper from the examiner's point of view. That means what they expect and what they are expecting you to write. What you write and what they actually expect. Say for example, they are asking the advantages. Say advantages of a particular element. You will be writing the features. So both doesn't actually match. So these things very minute in detail they have explained. It's just you can say it is basically a postmortem of your paper, what you have written. So how many students have attempted a question? What is the maximum number of questions that is attempted by a student? Where exactly they are losing the marks? All these things they would have. So this first go through that examiner's comments in detail for all the papers. See what the examiner is expecting. Say if you go for auditing, it will be more relating to the presentation part. So the mark is for presentation, auditing and costing. If you go for accounts, it will be with respect to the notes to account and the disclosures you make and the steps you give. If you go for taxation, it will be relating to the format, the SSC, the assessment year, and the provisions you give for each and every step. So there are specific points they expect from each and every student for a subject. So these things are given in detail in the examiner's comment. Please do have a look at that. Second is go through your study material mock test papers. Previous mock test papers also, like 1 or 2 years back also, just go through that. And especially for this law paper, revision test papers will be of great use. At least collect 5 to 6 revision test papers, 5 to 6 years back revision test papers, just go through that. And especially for standards on auditing and accounting standards, a lot of questions come repetitively from these revision test papers. Go through that, and then for your case scenarios, for the case studies and the MCQs that is given by the institute, it is a must that you don't skip that, because if you know for any theory paper, it is little difficult to score on the theory. But 30 marks MCQ, it is a sure shot thing. So if you are understanding the concept and practicing it, you should be in a position to get at least 25 above for that. And similar 25 if you get for theory, that is very easy. Out of 70, if you are getting 25 also, you will be easily getting 50 plus. So 60 or getting an exemption is not a difficult thing for students, especially when you have this MCQ thing. So all the very best for all of you. Please make full use of this revision test papers and the classes and the mock test papers. And even any query, you can get in touch with the SICASA Vijayawada branch. I am sure they will be like very happy to help you out and give you more classes and programs to help you with your examination. All the very best. Yes.
Thank you very much, madam, for your valuable words. Definitely your guidance will be helpful for the students in coming our exams. Thanks a lot for your suggestions.
Sure.
I request Narendra Babu Garu, Vice Chairman, Vijayawada branch of SIRCF ICAA, to have a few words for the benefit of students.
Sir, just 1 second. I 1 second. Sorry to interrupt, sir. I actually have a meeting to attend. Can I take leave?
Thank you, madam. Yeah.
Hey, but before that, one word we want to say, we want to share about the branch, ma'am. Actually, our Vijayawada branch is all over the AP. Out of the 45 branches, also SIRC, we are the best branch award winner last 2 years for the students also, SICASA. And as well as in large category, we are the best branch award winner in the ICA head office level, ma'am. This is the biggest branch and the prestigious branch also. We are also happy here in the part of the branch today. You are inaugurated our student classes also. Thank you, ma'am. You can.
Sure, sir. And I also wish you to get the same awards in the coming years too. And I'm sure that will be achievable with a managing committee like having eminent persons like you. And my best wishes and all the support for your future endeavors. Please get in touch with me if you need any support from SIRC.
Definitely, ma'am. Definitely with your support. Definitely we will same legacy we will continue, ma'am. Thank you.
Thank you so much.
Sir, can I?
Narendra, please.
Yes. Actually, Sarada Dipti ma'am, good morning, madam.
Good morning, sir.
Sarada Dipti madam, unfortunately, I joined, madam. Actually, I didn't get remember also this session is going to be starting today.
Okay.
Unfortunately, I joined it. Okay. Actually, one thing I want to share about the Sarada ma'am. As she was the first time in the ICA Vijayawada branch also. Maybe ma'am remember. I think. Okay, I'm the introducer in the branch.
Yeah.
To the students. Today is also unfortunately the same thing happened simultaneously, madam. I'm happy. This is also I am part of this session. Students, friends, ma'am is well versed in knowledge and she is having very communicative capabilities and law also. And please utilize ma'am time is going to be spent a lot of benefit of the students and she is also well motivated and well supporter to the student fraternity. She is having a lot of enthusiasm to develop the student fraternity. Lot of things she wants to develop personality development skills. Also, she is going to be conducting that, and we are happy. She's madam is also sparing some time to the benefit of the students. Thank you, Sada Dipti madam, accepting and our invitation to conducting the classes without any expecting from the branch also. Thank you, ma'am. And Sikasa sir, chairman sir, you can go ahead, sir. Thank you for giving the opportunity.
Yeah, I take this opportunity. Yeah, I take this opportunity to just read out the profile of Sarada Dviti madam. She is a highly motivated and self-initiated audit and law professional with over 10 years of experience, and she is also a senior partner in Tier 1 Chartered Accountancy firm in India. Her specialties are business law, taxation, auditing, team management, marketing, teaching, and public speaking. She designed and led courses on corporate and business laws for students appearing for level 2 examinations with the Institute of Chartered Accountants of India. She provided customized coaching to students on examination preparation strategies, including tips on time and stress management. She counseled and mentored so many students on setting professional goals, shaping their career paths to become a successful accounting and audit professional. She invited as a key speaker on several occasions to address students of Institute of Chartered Accountants of India. She is also actively engaged in several cultural and community services, initiating as advisor, member, and volunteer. Last but not the least, she is a mother of 2 beautiful daughters and enjoys traveling and music. So by this, I'll hand over
another thing is also with one thing, sir. It is the secret of another thing is also ma'am's father is a chartered accountant, and as well as husband is also chartered accountant, and they are beautiful lovebirds.
It's all
yeah.
So by this, I'll hand over the rest of the session to you, madam. Once again, we sincerely thank you for accepting this and for the benefit of the students. Thanks, up to you, madam. Thank you.
Thank you so much. Thank you so much, Narendra, for the wonderful introduction. Thank you, ma'am, Rekha ma'am, for giving this wonderful and valuable tips to the students. I remember, Narendra sir, we started with the teaching career and the way the journey, and we are really proud of you, the way you have, drastically from a teacher to a mentor, and now you are the vice chairman of ICAI. And the Jain sir also, thank you for giving me this opportunity, sir. So it's my privilege and honor to teach, and it's come out totally out of passion to teach for the student community from the last 13 years, and I have taught around more than 5,000 students. So this is a God's given opportunity to me, and I think I would definitely fulfill all the wishes and the responsibility of mine towards the student community. Thank you so much. So can I start, sir?
Yeah, madam. Please start.
Okay, thank you.
You can share your screen, madam.
Okay, definitely. So very good morning, one and all. Today we are starting our corporate and other law session. And as we all know, we are company law, we have company law and other laws, we have negotiable instrument and Indian Contract Act, general clauses and interpretation. Companies Act is for 60 marks and other laws are for 40 marks. Basically, before starting my session, let me give a complete background about what is law and how we need to prepare for this particular paper and what is the right way and right approach of presentation, so that we could so I request if anybody are on like unmute, please try to mute because I can hear your voices, so that there will be some disturbances. Okay. Friends, if you have any doubt, I mean, like in between, I'll ask so that you can ask me a few queries, and I will try to respond to you. We all know that Companies Act is for 60 and other laws 40. Ma'am, in what way we can get good marks, we can score marks? I know everybody are preparing, preparing for the exam, they're doing revisions, but unable to get good marks in the examination. What would be the reason? First, I would ask each and every one is individual. You can't compare one person preparation with other student. Okay. So basically what you have to do is, initially you need to understand, so what are your strengths and weaknesses toward this particular subject? Okay. Each one have their own, see, some like accounts, some like tax, some like law, some like theory papers. So we need to understand what is our strength. So accordingly, if we analyze and if we try to study in a smarter way, okay, you do hard work in a smarter way, you can get good marks. Okay. So for that, what we need to do? Basically, this law have in this particular paper, we have different types of asking questions in your examination. Okay, different patterns. You have few questions in a direct theoretical questions in a direct way they ask. You have 30 marks for bits, and remaining there will be most of the questions they will be asked in the form of practical questions. Those are case laws. How to handle them? First of all, during the examination, when the question paper is given to the student, first go through the question paper properly, carefully, spend some time, 5 to 10 minutes for that reading of the question paper. Understand what are theory, what are direct questions, what are practical questions, and bits means they will be given in a separate part. We can easily understand and score good marks in the bits. Bits also, you don't get confused. Understand the concept properly, read the question once or twice, and try to give a right answer rather than in hurry burry, like just reading. Some students, what they do, they read the half of the question and they think that they know, okay, this is the answer, like A, B, or C. But no, read the entire question properly and try to answer carefully. Okay. Next, theoretical question. So first we should understand what answers or what concepts would be asked in a direct theory way. Okay, so there are particularly few aspects, especially in your law, like for example, when you go to that particular incorporation chapter, they will ask you for 3 to 4 marks, what are the documents which you need to file at the time of incorporation? Such questions would be asked in a theoretical way. They can't ask any kind of practical question in those areas. Okay, so when I teach, I will give that particular compartmentalization to the students. This particular concept, definitely you'll have a practical case law. This particular concept you will have in a direct theoretical way, and there are few smaller concepts where they will ask you like bits. So if you know that particular compartmentalization, when you're preparing also, you don't spend so much time in the areas where they would ask like bits, or you don't spend so much time where the areas they would ask like a practical question, because the provision concepts are more important. Okay, so this is the first analyzing of your paper. This analyzation is important not only just for all the CA inter theoretical papers. This would also help you when you go for the final, when there is huge volume of syllabus. Okay, when there is huge volume of syllabus, first the student would get scared how to handle this particular paper, or how to read, where to begin, where to end. So these are all different queries the student would get. So in order to first you need to come out of all those confusions, and you should know the right approach, then right presentation, then you will get obviously a very good mark. Okay, so I will generally, while I'm teaching, I will give you all those such tips which you can implement. Okay, when it comes to a practical question, okay, practical case laws, ma'am, this practical case laws, when we read the particular question, you should directly relate it to which particular topic they are asking, to which concept they are asking about, and what are the right provision to implement in that particular case law. Okay, so you should understand what is the provision you need to write. So in that particular practical question, what generally I suggest is, see, for example, when you are in a student stage, when a maths problem is asked in your schools like 10th class or in your intermediate, how would you answer? Like in a trigonometry, a plus b whole square equal to a square plus 2ab plus b square is the formula. Okay, the given inputs, they will give a is so and so, b is so and so, you will implement and you will give the answer. In the same way, first of all, when the question is asked, first you need to write in practical from the facts of the case. Facts in the sense that the input which is given in form of a question. You need not again write the entire question. You just write that part in 1 or 2 points, the inputs which are given. Next is the provision. Provision is nothing but the formula from which part of the company is asked this particular provision is being discussed. Okay, so is it from buyback or is it from holding or subsidiary? You should understand what concept or what provision is it, and write according to the provisions of Companies Act 2013, the so and so is the provision. Okay, then you are giving an impression to the valuer that I know this particular formula or this particular provision of Companies Act. So then they will understand, okay, this student knows the concept, this student knows the provision. Then if there is any discussions you need to elaborate, give it in another heading called as analysis. Okay, if for few case laws you need not write analysis, you can skip analysis because there are very direct small questions, you can directly go for the conclusions. So the practical case laws, it is necessary to draft the practical case laws under 4 headings like facts of the case, provision related to the case, analysis of the case, and then you go for the conclusion. Okay, so depending on the marks and depending on the time, as Rekha ma'am said, time management is very, very important. So what I suggest to the students is, when you get the question paper, take a pencil and mark what are the questions which you know and which you are very thoroughly you know that, and where you can write fast. First write all those particular questions, then go for the questions which you can take some time and think over it and write, so that you can efficiently manage time. Otherwise what you will do, you will write one question, after that you put another question which you don't know. You'll spend so much time only for one particular question. Don't spend time. I want all my students to write for 100 marks. Okay, if you write for 100 marks effectively, then you can definitely score above 60s. In order to write 100 marks, you need to know thoroughly the concept as well as the time management. And one more another tip for time management is, you should practice writing, especially for theoretical papers. It is not sufficient for you to just read for the exam and go directly for the exam. You need to practice. How can we practice, ma'am? Point number 1, you can practice by practicing few case laws. Take some time and try to practice it. Second one is, attend as many as mock tests which are being conducted by the institute or any other mode or of online mode, where you can take a question paper and try to answer. And every day I insist my students to practice writing for 10 to 15 minutes. It is not just helpful for law, it is also helpful for all theory papers, because the speed of your writing would be improved over a period of time, not in 1 or 2 days before the exams. You cannot directly go and experiment in the examination halls by taking a pen and trying to write in 3 hours. Okay, it need to be practiced and it need to be implemented over a period of time. Definitely the speed will come. And I know generally all these things you know, but implementation is more important. I request all the students to implement. And one more tip, students, where generally students, because I have been trained for last few years, there are few students who are struggling to get marks in theory papers, because their weak points are, number 1, whatever writing they are doing on the paper, it should be understandable to the valuer to give you marks. Because I find few students, they are writing, but their handwriting is not being understandable for. Because if whatever you write, if we can't understand, how can they give marks? So first, students, try to improve your writing, especially students who are weak in writing. Please try to focus on your writing, improve your writing. Ask your friends whether they're able to read your answers or not, because these are general things. Generally the students will overlook, and he will not try to rectify his mistakes. These mistakes, if they are not rectified, if they keep on repeating in every examination or every attempt, you keep on getting very low marks. And you will, because see, you're getting low marks is not a big factor. You will lose the confidence. The confidence factor is very important, because what you think, ma'am, I'm able to get good marks in practical papers, but I'm not able to score in the theoretical papers. Please, why? What is the reason? You should identify your own reason. You should approach a mentor or you should approach a teacher and you should identify, ma'am, what is the reason? Definitely they will guide you. Once they give you a very good approach, you will implement it, and next attempt you will definitely pass. Because I have seen so many students trying to learn from their mistakes and trying to correct them, implement, and get the good marks. Okay, so these are the basic things, students. Please try to remember all these important aspects which I am telling, and try to correct yourselves and get prepare well and write well in the examinations. Okay, so these are the three areas. In these three formats, our corporate law paper or any generally our paper would be asked as in practical, theoretical, and bit pattern form. So next, yeah, before starting this particular topic of corporate law, I wanted to give you the basic information, because many students will first, without knowing a proper basic information, they'll directly get into the subject. As we all know, the Constitution is a supreme law power in our country. Okay, so it is a place where different laws are passed and implemented in our country. Okay, the Constitution is the supreme law which came into force on 26th January 1950. There is a day why we celebrate it as a Republic Day. Okay, then Dr. B.R. Ambedkar is the chairman. These all information is for the sake of general knowledge. There is nothing which is asked out of your examination. Okay, so why I'm telling all these is you should know certain things so that you will understand well that particular topic. You know the parliament, right? In that particular parliament, there are two houses like Rajya Sabha and Lok Sabha. There is a place where, if at all the country want to pass on, create a new law or they implement a new law, initially what they do, they will pass that, but they will prepare that law, they will pass it as a bill in the both houses of the parliament, which is called as the legislative body. Once it is passed in the both houses of the parliament, it should be accepted by the President of India. Okay, that is why you will see initially in the beginning of a chapter, acceptance or assent by the president on so and so date for this particular act. Okay, so once the president have accepted or signed that particular bill, then it would be enacted. It will come into force. So not only that date, the next important date is after it get accepted by the president, it will be notified in the official gazette, and that date we will consider it as a day on which the law is implemented in the country. Okay, so enforcement, okay, the law comes into force from the date on which it is notified by the government in the official gazette. So first it need to get approved in the parliament by the both houses, later signed by the president, and finally it will be notified in the official gazette. But in some acts, the notification date will not be given. Then what would you will consider the date of enactment is the date on which it is signed by the president of our country. Okay, so it depends. If both dates are given, you should take the date on which it is notified. If the date on which is notified in the official gazette is not given, then you should take the date which is accepted or signed by the president. Okay, executive body. What is executive body? For different acts, there are different heads in our country. So for our corporate law, we have MCA, Ministry of Corporate Affairs. For the Income Tax Act, we have Income Tax Department. For the Banking Regulation Act, you have RBI. So those are executory bodies or heads whose main responsibility is to see that law is being properly implemented in the country, and whether they are following, each and every state are following these rules and regulations properly, because these all are central acts. What are these acts? The acts which we are going to learn, like corporate law, NI Act, Contract Act, all these are central acts of our country, which is applicable to whole of India. Okay. Next, the last one is judiciary body. What is this judiciary body, madam? So, okay, ma'am, you told law is being prepared in the parliament, law is implemented by these various departments, and now, if at all the public or the organizations get any problems or doubts relating to law, disputes are arising, who will handle them, madam? Where they will get solution for their problems, where they would get the answers for their questions. Okay, so this particular judicial body, nothing but courts, High Court, Supreme Court, and these tribunals are responsible for solving the problems and questions relating to the law related issues are being settled in this particular courts. Okay, so that is called as a judiciary body. The head of judiciary body is the Supreme Court. This is the basic initial information about law and how the law is being made, how it is implemented, and who is going to and that is why in this particular corporate law we see whenever an issue comes, whenever a problem arises, we make an appeal to the tribunal, and the advice or the solution given by the tribunal, appellate tribunal, is final. Okay, so this is in general. Even income tax also you see the same pattern, and even in other acts also the final decision making power is in the hands of the tribunal or the court. So the constitution consists of three important bodies. Number one, legislative is nothing but the parliament, executive body, and the judiciary. Okay, this is the basic information. Now let's come. Today we are going to cover the basic concepts of Companies Act. And we have the topics of incorporation, memorandum and articles of association, and the prospectus. Generally, it's a very huge syllabus to complete, but I will tell you what are the important aspects in each and every chapter. Then we will go accordingly. Okay, if any students have any doubts or any queries, you can ask me here. Otherwise, I have given my number here in this particular screen, where you can WhatsApp me in personal if you have any doubts. Ma'am, we have this particular doubt in this particular topic, or we have any issues like you are unable to write your exam well. So you please try to give a message to me, a WhatsApp message, so that I will try to answer one by one personally. Okay. So when it comes to the provisions of Companies Act, like the initial basics of Companies Act, here you all know what is a company. So when the Companies Act came into existence, signed by the President of India on 29th August 2013 and notified in Official Gazette on 30th August 2013. And you have total 470 sections, 29 chapters, and 7 schedules. This is applicable to whole of India. These all information you need for bids, because MCQs we don't know where they will ask, so it's important for us to be thorough with all the concepts of the Companies Act and other acts. And one more thing, students, please be everyone have the institute material. So institute material is everyone be thorough with the institute material, because it's like a Bible or it's like a Bhagavad Gita for you. You need to keep that particular book, and any other books also you can refer, okay, for the information's sake. And in this particular Companies Act is also applicable to insurance companies, banking, and any other companies, which along they need to follow their own act, because these are statutory companies which are guided by their own act, and along with that they also form the definition of the Companies Act. So this is a basic information. Next, here definitions part. In definitions we have the definition of company, expert, relative, related party, and here when it comes to, I will discuss a few important definitions. Body corporate, important definition. What is body corporate, ma'am? Can a company be called as can all companies be called as a body corporate? Yes, all companies can be called as a body corporate, but all body corporates can't be called as a company. Okay, so what is a body corporate? Body corporate includes all companies incorporated in India and outside India. Okay, even foreign companies can also be called as a body corporate. Okay, but it does not include cooperative societies. What it does not include? Cooperative societies or any other body corporate as notified by the company, or with central government or the may notify that it will not fall the definition of the body corporate. Such companies will not fall the definition of the body corporate. Ma'am, what is body corporate? Yes, all companies which are incorporated in India, outside India, can be termed as a body corporate, except cooperative societies or any other company notified by the central government. That's all. Okay, so that's the definition of body corporate. Next, financial statement. This is also an important definition. These definitions would be asked as a bits. They don't ask as a practical question or a theoretical question. Some they would generally ask in the form of a bits. Financial statements, generally for every company, financial statements are nothing but balance sheet, P&L account, cash flow statements, changes in equity, and any explanatory notes. But in case of here, in relation to a company, all these things are included. But in case of an OPC, small companies, dormant companies, the financial statements does not include cash flow statements. This is an important bit. Okay, so generally financial statements means balance sheet, P&L account, cash flow, and explanation. But for what is not included means cash flow statements are for OPC, small company, dormant company, does not include cash flow statements. Okay, so for them financial statements means only balance sheet and P&L account. Okay, so these are the few important definitions. Next, public financial institution is also an important definition. Next, key managerial person. Who are the key managerial person for a company, ma'am? The key managerial person means the chief executive officer or managing director or a manager, company secretary, whole-time director, and chief financial officers. These persons are called as who are in the whole-time employment of the company and who occupy the role of directors are called as a key managerial person. Here, one more point I'll tell you. Here, a few basic inputs I'll tell you relating to a company. Generally, when a company is incorporated, where the company it is incorporated, the place in the which state it is incorporated, in that place it will have its registered office. Ma'am, what is this registered office means? Registered office is nothing but the head office of the company. For example, when we take an Infosys company is registered in Bangalore, okay, so in Karnataka. So the ROC of Karnataka will give the certificate of incorporation for Infosys company in in Bangalore, where it have its head office, the registered office. So registered office is nothing but head office of the company. ROC office is nothing but register of companies. It's nothing but a central government department which is responsible for legally implementing incorporating the companies in that particular state. You can ask, ma'am, how many ROCs are there in our country? In our country, there are about, for each and every state have an ROC, except it's two states like Tamil Nadu and Maharashtra. You have two ROCs. Okay, Tamil Nadu we have one ROC in Chennai, another ROC in Coimbatore, and in Maharashtra we have one ROC in Pune and another ROC you have in Mumbai. Ma'am, why specially for those two states you have two ROCs? Why other states you have only single ROC? The main reason for that particular thing is because in those states the number of companies are more. In order to manage so many, in Maharashtra and the state of Tamil Nadu, you have so many companies. So in order to manage those affairs of those companies, the central government has allotted two ROCs because one ROC can't handle that much of workload. So it is handled by the two ROCs. That's the only reason why you have two ROCs in the states of Tamil Nadu and Maharashtra. Okay, so these are the very important points. Okay, next. What are the characteristics? This is a very simple thing. If a company, here one very important point you have to understand is company is an artificial person. It comes into incorporation only when the promoters join hands together and they incorporate for the purpose of starting the business. Okay, so company can't do things on its own. It needs the help of human beings. Again, who are those human beings helping the company? Are nothing but the board of directors. Initially they are called as promoters. Later on, after the company is incorporated, they become the board of directors who will take care of the day-to-day affairs of the company. Therefore, and the company is separate legal entity. The advantages of forming a company form of business are limited liability and separate legal entity concept, which we could not get in the partnership and sole proprietary concern type of doing business, because in sole proprietor and partnership the member and the particular business or the firm are same. So therefore the liability of the member in case of a partnership firm, in case of a sole proprietor, is unlimited. But when it comes to the company form of doing business, the company is separate from its members or separate from the persons who have made investment in the company. Therefore, the liability of the members is limited here. And whatever property you purchase in the company, you should purchase it in the company name only. Okay, so company will have its own common seal, company have its own property, and company is separate from its members. Okay, so these are the basic important characteristic features we have to look into. Here, one important characteristic feature I am telling you, that separate legal entity concept in which there is Salmon and Salmon case is also important, because that particular point they would ask as a practical question sometimes. What is it, madam? I'll explain you that particular Salmon case, then you'll understand the concept. Salmon is a person who is doing a sole proprietary business, shoe business. He's actually doing sole proprietor shoe business. He wanted to expand his business. So he wanted to convert his sole proprietor business into company form of doing business by joining hands with some other persons or promoters who want to invest in that particular company. Therefore, what this particular Salmon have done, Salmon have sold his sole proprietor business to that particular the company, the newly formed company. So newly formed company as a consideration has given Salmon some debentures, some shares, and some in form of cash as a consideration given to the Salmon and his family. So Salmon and his family members hold some amount of shares in that particular newly formed company, and they also hold debentures in that newly formed company. Okay, so after few years the company went into winding up. Okay, what happened after a few years? Company went into winding up. In such particular case, the unsecured creditors, the other creditors of the when company goes into the winding up, what will happen? A liquidator will be appointed, and he will start repaying debts to the creditors on priority basis. How the liquidator will pay? On priority basis. In the same way, the liquidator started paying the amount to the Salman as a secured creditor, because Salman is a secured creditor. He got secured debentures from the company, therefore he's been treated as a secured creditor. Then what happened? One of the other creditors have came and raised a question and filed a case against the Salman in the court of law, saying that Salman and company are same. Okay, he is the person who have initiated of starting this particular company. Then why the liquidator is paying the debts first to the Salman? He have to pay the debts first to the outsiders, then to the Salman. No. So he have filed a case against the company and the Salman in the court of law. Then court interfered into the matter, and court declared the case, saying that even though Salman have started the company and having majority of shares in the company based on separate legal entity concept, the Salman and company are not same, they are different. Okay, as Salman holds secured debentures of the company, he will be treated as a secured creditor. Therefore, liquidator paying him back the money as a secured creditor, treating him as a secured debenture holder is valid. Okay, the act of the liquidator paying back to the Salman is valid. Is the decision given by the court of law. So you should explain. If they ask you to write about separate legal entity concept, you should explain with the case law. So in the same way, perpetual succession. What's the meaning of perpetual succession? The company continues for a longer, the company, even though members die, even though all directors die, even though promoters die, everyone die, company will be still existing. It will be still there. It will be still alive. Even though, like in recently in Ukraine and Russia, there is a big war happening. Like that, if war happens and when there is a big bomb blast on the particular company, that the company will be still in existence. Where, madam, where the company will be in existence? It is existed in the records of ROC. Okay, the company will go forever and ever until it goes into winding up. The life of the company will go on, even though its members die, even though the building collapse, it will be still be existed in the books of ROC. Okay, so when the company will wound up, when the company have lost its business and when the company goes into winding up, then the company's incorporation will be closed. Okay, so in that way, the company have this particular important characteristic feature called as perpetual succession, which we can't get in sole proprietor and partnership, because in sole proprietor and partnership, if the proprietor and partners die, the company will also die. Sorry, the business or the firm and partnership firm and the business will also die. But this particular principle does not apply in this particular company side. So these are the few benefits we can get when we do the business in the company format. That is why everybody are more interested to do the business in the company format. Okay, so transferability. Another important characteristic is transferability of shares. That is why a shareholder or a member invest in the company because of the easy liquidity. Whenever he wants his money back, he can sell it in the market, he can get back the money, and he can happily use it for his purpose. Okay, so there is easy transferability of shares, which enhances the liquidity ability for the shareholder or the member of the company. Okay, so these are the basic important characteristic features of a company. So which are explained in detail all these aspects. Okay, and here very important, another examination bit here. Citizenship and residential status. Here, ma'am, does a company have a citizenship status? I'll ask you one question now. Tell me, do we all have citizenship, or we are citizens of India or some other country? And do we have proof showing that we all are citizens of our country, citizens of India? Yes. Where, ma'am? Where? How can we say that we are the citizens of India? We can say, we can show this Aadhaar card, we can show passport, we can show the annual, we can show the tax returns who are filing the tax returns, voter ID. All these will show us that we are the citizens of India. Then when it comes to company is incorporated in our country. The company has certificate of incorporation. Can company show the certificate of incorporation and claim that it is a citizen of India? No. What the act is saying is company is not a citizen of India because it is not defined under the Citizenship Act 1955. Okay, so company cannot be termed as citizen of our country. Then you can call company as a residential, the company is a resident in India. How? Basing on the residential status of the company. The residential status is defined for us in Income Tax Act and the FEMA Act. The same is also applicable in Companies Act 2013. Okay, in Income Tax Act, the residential status has been defined like resident and non-resident. Okay, so according to the provisions which are applicable in Income Tax Act and FEMA Act, which you are going to learn in final, will define the residential status of the company. Therefore, you can say that the residential status is defined for the company in Companies Act 2013 according to Income Tax and FEMA Act, but the citizenship status is not defined. Okay, so these are the few important inputs regarding that. Next, illegal association. When do you call as an illegal association under 464 of the Companies Act? This particular area can be asked for your practical question. See here, what the Companies Act 2013 is saying is any association doing business with members exceeding 50 and which is not converted into a company form of doing business will be termed as an illegal association or illegal partnership. Okay, so if any firm or partnership doing business with more than 50 members should immediately register. So before getting a 50 number, before itself it should convert itself into a company and get it registered. Otherwise, it will be treated as an illegal association. However, here HUF, single HUF doing business for profits, in such case for the HUF business, this particular provision is not applicable, and professional partnership firms like RCA firm, engineering firm, lawyers firm, doctors firm, and for this particular professional partnership firms also, this particular provision of illegal association is not applicable. It can do with a number of persons for the business for profits. Okay, other than this, any other association or firm doing business for profits with more than 50 should immediately convert into a company form of doing business. Otherwise, it should be treated as an illegal association. Okay. So next important concept, theoretical concept, is lifting of corporate wheel. What is this wheel, madam? Wheel is nothing but, what is a wheel? It's a kind of a curtain. It's a kind of a barrier. Okay, between whom? Between the company and the persons who manage the affairs of the company. Okay, I will tell you here. You all can say, ma'am, it's good if you start a business in form of company, but you told no, the company separate from its members, and members while they're conducting the business, like in the sense the directors who are conducting the business, there are chances that they will do frauds, okay, for their own personal benefit. And they do that particular fraud, and that particular loss should be borne by either company or by the public who have invested the money in that particular company. Okay, right? In such cases, does anybody will have a trust of investing in the company? Okay, nobody will. No, for everybody will have a fear of investing in the company because they think that the affairs of the company are not being properly managed. That is why there are so many loopholes in the management of the company. Nobody is being punished. The law is not properly, laying restrictions on this particular company form of doing business. Therefore, members will stop. Therefore, the public will stop investing in the company. What will happen if public stops investing in the company? The GDP of the country reduces, because only when companies of a country grows, the employment opportunity and the GDP of our economy grow. Okay, so that's why in order to create confidence among the shareholders, among the public, in order to protect the interest of creditors and this particular investors, this concept of lifting of corporate will have come into existence. The concept explains that, okay, if any director or a principal member of the company, okay, using this separate legal entity concept, have did some fraud, creating loss to the company and to the shareholders. In such cases, even though a separate legal entity concept is there, that would be lifted, and the court will identify the persons who have committed the particular fraud or loss to the company and punish them severely, and they would be personally liable to bring back all the loss into the accounts of the company. Okay, so this particular concept have been incorporated in order to create the trust and in order to create the confidence among the creditors and investors who are investing their money into the company. Okay, so this is a kind of a fear which have been created to the directors that if they don't follow properly the statutory provisions, they would be punished. Okay, so this concept is explained with the help of few judicial interpretations and statutory provisions. For example, what are the statutory provisions, ma'am? Generally, every public limited company should start with a minimum of 7 members. Private limited company should start with a minimum of 2 or more members. Okay, can you change the provisions of Companies Act? Do we have any right to change the provisions of Companies Act? No, ma'am, we are starting a public company with 6 members. Is it possible? Is it not violating the provisions of Companies Act? So the shareholders or the directors, whoever, or the promoters who are starting the company should mandatorily stick on to the provisions of Companies Act. They have no right to change the provisions of Companies Act. Okay, so this is one of these. If the number of members have fallen below the 7, immediately the remaining members should take steps to increase it to statutory minimum of 7. If they don't increase to statutory minimum of 7, then the company will go into winding up, or it need to get converted into a private company. Okay, so the statutory provisions are not being implemented, the corporate will be lifted, and these remaining persons would be liable for this particular loss or penalty to the company. In that case, you have few judicial interpretations. What are judicial interpretations? Judicial interpretations are nothing but different case laws or different cases which are handled in the court in the previous years. Those are given as an examples for us. So in examination, if they ask you to write about the concept of lifting of corporate will, give the small provision, and depending on marks, you can write one judicial interpretation example and one statutory provision example. If the number of marks allotted are more, you can give 2 or 3 examples. If number of marks allotted are less, at least you try to write one judicial interpretation and one statutory provision. Okay, so these are the important areas which we have covered in the first chapter, Basics of Companies Act. Okay. Next, we will go for the second chapter. I mean, before going into that, here we also should see the kinds of company. What are the different kinds of company? Okay, companies are divided on the basis of incorporation, on the basis of liability, on the basis of control, on the basis of number of members, and others. These are the different bases of how the companies are divided and how the companies are incorporated in our country. Okay, fine. When it comes to basis of incorporation, we have 3 types of companies: chartered companies, statutory companies, and registered companies. Okay, so madam, what are these chartered companies? Are they existed in India? This is one examination bit which will be asked in your examination, so mark the particular point as a bit. Chartered companies are those companies which are formed by the order, rules, and regulations of a king or a queen. Okay, so if you now in our India, does we have any rule by a king or a queen? No, we don't have. Previously, during the Britishers' time, we have the rule by the Britishers, where the king or queen, the head of the British Empire. So now we don't have. That is why during those days, East India Company will be treated as a chartered company. But in India, as of now, there are no charter companies in India. But there are charter companies in outside India. In other countries, there are charter companies in London. There are charter companies in Australia. There are charter companies in New Zealand, but they are not there in our country. Okay, in examination, do we have charter companies in our country? No. And previously, we used to have an East India Company. Okay, next, statutory companies. What are the statute? Statute means parliament. Statute means constitution. The law, the acts which are passed in the parliament. Okay, the companies which are formed by these special acts are called as statutory companies. That way you call them as statute. They are guided by their own act. LIC is a body corporate. Can you call these statutory companies as a body corporate, ma'am? Yes, it's a body corporate, and it has its own act, which will also follow its own LIC Act. Okay, so like that we have RBI, ICA, for example. ICA is a statutory company which have our own act. Okay, so it can also be called as a body corporate. Next, third one, companies which are registered under the present Companies Act 2013, or you have so many previous Companies Acts like 1956, and before that also you have a Companies Act. So it keep on amending from time to time based on the requirements. Okay, so these 3 are on the basis of incorporation. Okay, next one, on the basis of number of members. Okay, so we have 3 types of companies on the basis of number of members: public companies, private companies, and 1% company is also a part of a private company. You can call 1% company as also a private. In public company, you have 7 or more members, and in private company, you have you will incorporate with 2 or more. I mean, like 2 or more members. And in case of OPC, you will start only with the 1% as a member. Okay, there's only 1%. Okay, this particular OPC type of companies have been started like initially in United States of America. It is more popular there, and recently we have been adopted this particular type of companies in India in order to enjoy the benefits of the company. The OPC will also have all the benefits of a company like that you can enjoy, even though you are a sole person who is managing the company, but you can enjoy the benefits of a company. So that is why the OPC have been recently have come into our country, this form of doing business. Next, on the basis of ownership, you have holding companies, you have subsidiary companies, and you have associate companies. Okay. Next, on the basis of controls, we have 2 types: government companies and non-government companies. What are government companies, ma'am? In government companies in which not less than 51% of the paid-up share capital is held by central government, state government, or partly by central government or state government is called as a government company, and the remaining all types or other types would be called as a non-government company. Okay. Next, liabilities. Liability on the basis of here limited liability companies, and there are unlimited liability companies. What is this liability, madam? Liability is nothing but in this particular case, the liability of a member towards the company. Okay, whoever is starting the company, the liability is limited to the extent of unpaid value of the share. For example, the value of the share is 100 rupees. If that particular shareholder pays only 60 rupees, and balance how much he have to pay? 40 rupees. Therefore, the liability of the shareholder is limited only to 40 rupees unpaid value of the share. This 40 rupees can be paid whenever the company call for that particular amount. Okay, so first what generally the company will do, when the company issues a prospectus, it will collect the application money, it will collect the first call or application money, and later on the balance amount the company can call any time during its life. Okay, remember this particular point. The company can call the balance cost any time during its life. Okay, and therefore the liability of the member will be limited to the extent of unpaid value of the share. Otherwise, if the shareholder want to pay the entire money at one chance, he can also pay that, and he can totally pay the value of the share. Okay, therefore this liability is limited by shares and limited by guarantee. What is this guarantee amount, madam? Generally, the persons who will start the company, they are called as subscribers to memorandum. What they will do before signing the memorandum, in some cases, they would promise to the company saying that when company goes into liquidation, we would guarantee some amount for the company, and they will mention that how much amount they would guarantee, and that particular guaranteed amount will be paid by these subscribers only at the time of winding up of the company. Okay, the company cannot ask this guaranteed amount any time during its life. They can call this guaranteed amount only at the time of winding up. Therefore, the liability of members is limited to the extent of unpaid value of the share, and guaranteed amount, if any, only when it is there. If it is not there, you need not call. Okay, now you need not ask for that particular amount during the life of the company. Then what are these unlimited liability companies, madam? Generally, these unlimited liabilities companies are like generally non-profit organizations and organizations which want to promote, not other than Section 8 companies. Okay, their objectives are also similar to that. And the liability of in this particular case also, the liability of the members, the unlimited will arise only at the time of winding up, not during the life of the company, or not when the company is going on, or during as a going concern. Okay, so for example, I am a member of an unlimited liability company, and the value of my share is 100 rupees, where I paid 40 rupees. Okay, I have to pay 60 rupees. Okay, so that 60 rupees also I paid to the company. So total 100 rupees I paid to the company. But after a few years, company went into winding up, and company have huge debts. Then company asked me at that time to contribute 20 more rupees for the shares. This 20 is called only at the time of winding up. The company should call this extra unlimited liability value only at the time of winding up, not during the life of the company. Happily, until my debt company is going concern only, then I need not even pay single rupee to the company. My liability is only 100 rupees. If after my death the company goes into winding up, then I'll not be liable. Okay, so in such cases, if whoever is there, whoever are acting as a shareholder during that time, their liability the company will ask at that time to pay that extra money in order to discharge the debts. Okay, that's the basic difference between limited liability and unlimited liability companies. Okay, so next, meaning of public companies and private companies we have seen, and here private company definition is very important for practical questions. What is important in this particular definition, I will tell you. Okay, in case of a private company, the minimum member are 2. Then is there any restriction for maximum numbers? Yes, there is restriction for maximum numbers in case of a private company, that is 200 members. Okay, the maximum number of members in a private company are 200. In this particular 200 count, you should not consider the present and past employee members of the company. For example, okay, in a private company there are total 254 members. In the 254 members, 54 are the employees of the company who are also holding the shares of private company. Okay, and 2 are the past employees who hold the shares of the company. Total 56. So 200 minus 56, it will be 194. Therefore, since it is less than 200, yes, the company can continue as a private company. Understood? Okay, these are the main important points which you have remember in case of a private company. In case of a private company, the articles have few restrictions. What are those restrictions, madam? The members cannot transfer the shares to outside public. The members within among themselves should transfer the shares. That is one important restriction. Number 2, the company cannot invite public to invest in the company. The outside public can't be asked for investing in a private company. Okay, so there is no public issue of shares. Here there is only private placement in case of a private company. And the maximum number of members in a private company are 200. It will not, it will, in this particular 200, whom all we will deduct, madam, who all will not count with present and past employee members. That is nothing but past employees and present employees who hold the shares of the company. We will reduce them. And if there is a joint shareholder holding shares, you will count him as a only single person. Okay, joint shareholder is considered as a single shareholder. So these are the important restrictions in case of a private company. Okay, please remember they would be asked for the examination. Next, OPC. You all know in case of an OPC, one important point which you have to keep in mind is, in case of an OPC, the person who is acting as a member of OPC is an Indian citizen and having the residential status, and he's a natural person. He can't be an artificial person. I will justify this point. Please listen carefully. In this particular case, in a company, who all can become a members of a company? Can I become a member of a company, or can another ex-limited become a private, become a member of one company? Yes. Both natural and artificial persons can become a member of that particular any company which is incorporated in our country. Okay, but however, in case of OPC, when it comes to OPC form of business, only a natural person can act as a member, and he can appoint another natural person as his nominee for assisting him during the business. Okay, so he can appoint another person as a nominee. Okay, so in this case, there is a small change is, the new change happened in this particular OPC. Here, while we are calculating the residential status of the person, his stay in India is, previously it used to be 182 days. Now they have reduced the period to 120 days. Okay, it is sufficient for a OPC for the person to become a residential in our country. For his stay in India should be not less than 120 days. That is minimum he have to satisfy the period of 120 days. Okay. So these are the important points relating to OPC. You can add one more point. Ma'am, once we have started to do OPC, can we convert into any type of company? Yes, you can voluntarily convert into any type of company. Previously, there used to be a minimum 2 years restriction. Now that particular provision have also been removed. Okay. Next, these are, I have already told you, company limited by shares and company limited by guarantee. Next, holding and subsidiary company, you know, if one company controls the board of directors of other company, the company which is controlling is called as holding company, that other company will be called as a subsidiary company. And the company which controls more than 1/2 of the total voting power of that particular other company, the company is called a holding company. Here, one important point I want to explain here is, the company which is controlling can either control by itself, or it can control, or it can have that investment with other companies also. For example, A, B together can, in this particular case, jointly can have a control in C Limited more than 50% of the equity share capital. In that particular case, A Limited can hold 40% and B Limited can hold 20%. Both together is more than 50 in C Limited. Therefore, A Limited will be considered as a holding company for C Limited. Why, madam? Because here B is already subsidiary to A. Therefore, A will be holding even for C company. Okay, so this particular point relating to holding and subsidiary is important for the practical questions. Once again, I am telling you, the company on its own or with help of its one or more subsidiaries can have the control over the other company. Okay, so this is important for the holding and subsidiary type of company. Next, associate company. In relation to any other company, a company in which one company is having significant influence over the other company. Here, significant influence means what? Control at least 20% of their total voting power. Okay, so all these points are very important from the definitions perspective. Please go through them clearly. Okay, other type of companies you have foreign companies, and there is small change even in this particular small company definition also. So please go through the small company definition. There is a provisional change in this particular small company definition. Small company means a company other than a public company where its paid up share capital should not exceed 50 lakhs or the higher amount prescribed, which should not be more than 10 crores, and turnover here. Previous turnover as per its latest P&L account should not exceed 2 crores or the higher amount which shall not exceed more than 100 crores. However, the holding and subsidiary companies, Section 8 companies and companies formed in special act does not fall in the definition of a small company. Okay, so the next very important, Section 8 companies. What are the Section 8 companies, ma'am? Any company which have been incorporated for non-profit motives like the sports, development of science, technology, commerce, social welfare, religion, charitable purpose. Such companies can incorporate as Section 8 companies, and they should get a separate license from central government for the purpose of carrying out these objectives. And whatever profits they derived out of doing this business cannot be given as dividend to its members. Okay, such profits are not given as a dividend to its members. They should again reinvest in their business or reinvest in their activities for the growth and for the betterment of their company, but not for the purpose of distributing as dividend. If they distribute as dividend, then the central government will cancel the license or revoke the license given to them and ask them either to go into winding up or amalgamate with some other private or public limited company. Okay, so these are the things which you have to see for Section 8 companies, non-profit companies, and they need not. Whether Section 8 is it mandatory for Section 8 companies to use the word limited or private limited at the end of their name? No, it is not necessary for Section 8 companies to use the word limited or private limited. Okay, so with this we completed the first topic, like basics of Companies Act. Okay, so these all are the basics. They will ask you in any form, either in form of bids or in form of practical question or in form of theoretical question. So please go through them and please be carefully plan for these practical questions also. Okay, next, incorporation. Very important topic. In this particular topic, incorporation, procedure for incorporation is important, and especially they frequently asked question is, what are the documents you need to file at the time of incorporation to ROC? Okay, why a company have to get incorporated? What is the reason for the company? Why what is the benefit the company would get once it is incorporated? Okay, incorporation gives the legal status for the company to do its business legally in that particular area. It might be in our country or in any state. It gives a legal status for the company. So incorporation is mandatory for all the companies to legally do business in our country. Who will do this incorporation process, madam? Okay, who will give us the certificate for a company? It's the ROC of that particular state where you are going to incorporate the company will give the certificate of incorporation for the company to start its business. Only after getting certificate of incorporation from ROC, the company should start doing its business. Okay. Okay. Ma'am, before incorporation, generally there be a group of people with some investment. They come together, okay? They have some idea of doing some kind of business, okay? Either they want to start a food business or cloth business or shoe business, whatever. They'll have some idea and they'll come together. The persons who will initiate the idea of doing business, okay, are called as promoters. Okay, who are called as promoters? Who have the idea, who will have the thought of starting up a company. General, this is a common person. If a common person want to know who is a promoter, this definition we give. We say that who have this idea of starting a business, they all come together with some amount as their capital or investment, and they will start the business. Generally, that person will be called as a promoter. But when it comes to Companies Act 2013, the definition of promoter is given in this particular way under section 2, subsection 69 of the Companies Act. Any persons whose name is specified in the prospectus of the company, or whose name is identified in the annual return of the company, and who will control the affairs of the company directly or indirectly, or according to whose directions the board of directors are accustomed to act, are called as promoters. Okay, because since we are learning Companies Act 2013, it is mandatory for us to know this definition. But outside it is not necessary. For outside, a promoter is the person who is starting the company or who have an idea to set up a company with some investment. But for us, what's the definition of promoter under section 2, subsection 69? It is nothing but the persons whose name is specified in the prospectus, who will have control over the affairs of the company directly or indirectly, or whose name is specified in the annual return of the company, or according to whose direction the board of directors are accustomed to act. That particular person will be termed as a promoter. Okay, so now you can ask, ma'am, along with this promoter, the promoter have to be educated, or an uneducated person can also act as a promoter. As there is no educational qualification given by the Companies Act. The person with so educational qualification only should start a business. Nothing like that. No such rules are there. Anybody can start the business. If he doesn't know the legal formalities, how to start up a company and how to legally start a company, whose help he can take? He can take the help of a chartered accountant, practicing chartered accountant, practicing company secretary, or a cost accountant. Or he for some loan or something, he can go and ask bankers, and for some legal requirements, he can ask a lawyer. So he can also take the help of a professionals. Now I'll ask you another question. Very important examination bit. This particular part will be asked for the bit. Okay, so they will say, does these professionals who help these promoters at the time of incorporation can also be called as promoters, madam, because they are also taking such responsibility of starting a company, madam? So can we call them as a promoters? Means what here the law is saying is Companies Act, no. The professionals, a person acting in the professional capacity cannot be called as a promoters, like solicitors, bankers, accountants, company secretaries are not considered as a promoters. Please mark this particular point. Next, as we all know, for Infosys company which have been started, these all the persons are promoters. I have given a small picture for it. Okay. So next, we know now these promoters, what they will do with all the ideas, thoughts, they will approach a chartered accountant and ask him for the help for the incorporating a company. Okay, so what are the important documents? What are the important necessary information they have to bring at the time of incorporation? First, they need to decide what type of company they are going to start. Whether they are going to start an OPC, whether they are going to start a private limited company or public limited company. First, they should have an idea. So the chartered accountant who is helping them in forming a company or incorporating a company will tell them what are the pros and cons of a private public limited company or an OPC, and how much capital requirement they need, or how many members they have to form. So all those legal requirements, they will help him out. Okay, then what initially we have to do here, the company incorporation will be done by a specific portal which is given under MCA portal. There is there in that particular portal. If you log into that particular portal, you have a SPICE form. You should download that SPICE form and fill all these details which are necessary for the purpose of incorporation. Okay, so before incorporating company, what are the other important documents which we need to incorporate are? Here we have MOA and AOA, that is Memorandum and Articles of Association, which are two important documents for the company for the purpose of incorporation. Okay, so just a minute. This Memorandum of Association and Articles of Association are the two important primary books for starting of a company. Okay, and you can ask, ma'am, how to draft this? The promoters does not know to draft. The promoters does not know how to draft this MOA and AOA. And then they can take the help of a chartered accountant. Chartered accountant will give help them in drafting MOA and AOA according to the schedule specified in the Companies Act. There are few schedules given. In that particular schedules, there is a procedure how to draft a MOA and AOA. Okay, after that, the company should decide over the promoters should decide over the name of the company. First, what they will do initially, they can decide one name or they can decide three names. Once the names are decided, those will be applied to the ROC, and ROC will see whether the name is a desirable name or undesirable name, and accordingly he will finalize the name. Once you get the name of that particular company, the remaining all other documents also you should file through this particular specific form to the website www.mca.govt.in to the department. Okay, so here, what are the documents, ma'am? A declaration here. These documents are very important to be filed along with that particular form to ROC. A declaration should be given by an advocate, chartered accountant, or company secretary who is in practice for the purpose of formation of the company. They should specify that the declaration. They should say that whatever things are incorporation procedures are taking place, everything is going according to law, legally. Everything is happening legally. They should give that particular declaration. Next, affidavit. Affidavit is nothing but a true note or a true document given by the persons, that is nothing but promoters and subscribers to memorandum, that they have not convicted any offense. There is no legal case filed against them. They this particular whatever incorporation process they are doing completely legally, and there is no case or no criminal or civil case against those individuals. That is, in that those details they will give in that particular affidavit. Next, they will give the details of the registered office. Next, they will also specify the details of the subscribers of memorandum and persons who is acting as a first directors, their name, PAN card, their Aadhaar card, everything, all those details they will file in that particular form. And finally, the consent of these first directors. Once all these documents have been uploaded, then ROC, after paying them the necessary prescribed fees, how much we need to pay, ma'am, for the purpose of incorporation. It depends on the capital, how much authorized capital you are providing in your MOA. Based on that, the fees for that particular the incorporation process will also be decided, and you should also make online payment. Okay, so once you make an online payment and all other formalities have also been completed properly with all the necessary documents filed, then ROC will give you a certificate of incorporation with the corporate identity number. The date on which the ROC gives you this particular certificate with corporate identity number is called as date of incorporation. Okay, so the date when all the formalities have been completed and the ROC have given you this particular certificate with CIN number, you will treat it as a date of incorporation for the purpose of starting your business legally. From that particular date, you can start all your business activities legal. Until then, until you get certificate of incorporation, you should not start any business because it will be considered as an illegal business. Here you can ask one more doubt, ma'am. After starting the business, after getting certificate of incorporation, in MOA, in objective clause, we have mentioned our business is so and so. But after getting into after doing that, getting certificate of incorporation, can we change the objective and can we do something illegal business? Is it valid? No. If the ROC or if anybody comes to know that you are doing such business, then ROC have complete right to cancel your certificate because you are doing an illegal business. Understood? Okay. So once they come to know that your business is illegal, even though the certificate is a conclusive evidence, they have all right to cancel your certificate. So this is one of the important point which you have to keep in mind. Okay, so all this information, yeah, okay, ma'am, fine. Somebody got certificate of incorporation and their MOA and AOA have been drafted and these are prepared and they are kept in the where they will keep all these documents, where they will maintain the company's registered office. That is nothing but head office of the company. All the documents relating to the company will be kept at the registered office of the company. And they can also place in the company's website electronically also they can keep. Okay. If at the time of incorporation, if the company fails to provide some information after repeated requests, or if they give wrong information, what will happen, ma'am? In such cases, the company will be punished. The ROC or the person who is responsible for the purpose of this incorporation will file a case against the company, and the company will goes into liquidation, and the particular action would also be taken on the company, and they will be liable under 447 of the Companies Act. Okay. Now, once after getting registered, what is the main benefit the company would get? Company would legally start its business. It would be incorporated with the corporate identity number, and it can happily start the doing business legally. Okay. Next. Here this about Section 8 companies. What is the formation of Section 8 companies? You please just go through that particular Section 8 companies. Next, one is very important, preliminary contracts or pre-incorporation contracts. Or promoters, I have already intimated you, or I have told you this particular point relating to the promoters. Next one is pre-incorporation contracts. What are pre-incorporation contracts? The contracts which are entered by the company before getting certificate of incorporation is called as a pre-incorporation contract. Okay, so these contracts are entered by the promoters of the company before the company gets incorporated. Now you can ask one question, ma'am, such contracts are entered by promoters, no? So after the company form, is it responsibility, is it binding on the company to follow this particular contract, or it is not binding on the company? In this particular case, what they tell is pre-incorporation contracts will be binding on the company after its incorporation only when company accepts it. That it means that all the shareholders of that particular company have accepted for the such contract, then only the pre-incorporation contract will be liable for the company after its incorporation. Okay, suppose if after incorporation, if the company could not accept this particular contract in their meeting, in such cases pre-incorporation contracts are not binding or liable on the company. Then who will be liable to the third party? Means the promoter who entered into that particular contract, who are responsible for such contracts. Therefore, so pre-incorporation contracts made by the company before its incorporations are not binding on the company. They would be liable only after company accepts them after the incorporation. Okay, so that's the important point which you have to keep in mind relating to pre-incorporation contract. Okay, so the next very, very important topic is Memorandum of Association, Articles of Association. It's a very huge chapter. In this particular chapter, we should know what is MOA, what is AOA, what are the clauses of MOA, and whether alteration of these clauses is possible or not, and what is Articles of Association, and can we alter these Articles of Association, what are the limitations for the alteration, and different doctrines. You have doctrine of ultravirus, doctrine of constructive notice, and doctrine of indoor management. Okay, so these all are the important concepts which we discuss in this particular topic. Okay, before entering into this topic, you know, MOA and AOA are two important books. Primary book is MOA, and the secondary book is AOA. MOA will define the scope and objectives within which the company have to operate. Okay, it will define the objectives within which the company have to operate. And what is AOA? AOA consists of various rules, regulations, and provisions for the internal management of the company. And these books are prepared at the time of incorporation, and after getting registered with ROC, these books are placed at the register office of the company. Okay, you can ask, ma'am, it is prepared at the time of incorporation. No, afterwards, if company want to make any changes in this MOA and AOA, directly the directors can come to the registered office, take those books, and can they erase those old provisions and write off the new provisions, ma'am? Can they change directly? No, they cannot change directly MOA and AOA. For the purpose of altering MOA and AOA, the contents of MOA and AOA, the procedure is given in the Companies Act. For each and every content, you have a procedure in the Companies Act. Compulsorily, you should follow that particular procedure and then only alter. Otherwise, alteration would be treated as illegal. Only after following the provisions of Companies Act, if you make these alterations, then only they would be considered as legal. Understood? Okay. So these are the important things you have to keep in mind at the time of altering the MOA and AOA. Now you should understand what are the clauses of MOA. Okay. Then what are the contents of AOA? Okay. Now, when it comes to MOA, you know what are the contents of MOA? Name clause, objective clause, liability clause, registered office clause. So all these are different contents of MOA. Okay. You can ask, ma'am, we will in that particular contents, we will in the name, we will specify the name. In the register office clause, we'll give the address of the company. Okay, and then in the objective clause, we'll specify what type of business the company is doing. All these are there. If we want to alter, can we alter? Yes, we can alter. Okay, what is the procedure for alteration also? I will tell you. Okay, first one, the name of the company. The company can a company change its name? Yes, the company will change its name on voluntarily on its own motion or compulsorily by the order of the central government. There are two methods of alteration. Okay. Now you have to listen one more point. For the purpose of any change you have to make in this MOA, you should also take the approval of shareholders. Ma'am, how do we take the approval of shareholders? The shareholders' approval will be taken in the general meeting by passing either ordinary resolution or special resolution. So these points will come when you change each and every clause of MOA and AOA. Okay. So how do we make change? We will make change in the general meetings of the company, where when the shareholders of the company will take the decision either by passing the ordinary resolution or special resolution. For the purpose of altering the name clause, here we need to understand few aspects. If the company want to voluntarily change its name, what is the meaning of voluntarily? On its own motion. If the company is from Sunrise Limited, it want to change to Sunset Limited. Okay, in such cases, it want to change the name, then it is sufficient for the company to pass a special resolution in the general meeting. What is this special resolution, ma'am? Special resolution means in the general meeting, if the shareholders more than 75% or more, that is at least 75% vote in favor of this resolution. Resolution is nothing but decision of the board. What is resolution? Decision of the board. The board of directors will give their decision, will exhibit their decision to the shareholders in the general meeting. Then shareholders, what they have to do? If they accept, then they will proceed with the altering. If they don't accept, the company should stop this particular change in the name. The board of directors will also specify the reasons why they want to change the names. And accordingly, here what resolution is necessary? Special resolution, where you need at least 75% of votes in favor of that particular resolution. Here students will make a mistake that in some cases where the Companies Act is saying special, they will write ordinary. For ordinary, they will write special or board resolution. Whatever they want, they will mix. This particular writing a wrong resolution is totally wrong. You will lose marks, dear students. So please be careful. So which resolution is applicable for what kind of change? This is very, very, very important. Okay, especially for changing in the name clause of this particular any memorandum, name clause or objective clause or liability, whatever clauses, whatever alterations you have to make, you should know what resolution you have to pass. Next, next, what is compulsory change? In this particular thing, you have also compulsory change. Compulsory means sometimes the central government will come to know that that particular company is using the name of other company, or the particular company his name is identical to some other company. And on the application issued by the registered trademark holder also, if the central government comes to know that particular thing, in such cases, it is mandatory for the company to change its name. Okay, so in this case, the company will conduct a general meeting and pass an ordinary resolution for the purpose of compulsory change in the name. What resolution here the company have to pass? Ordinary resolution the company have to pass after getting an approval from the central government. And after passing the resolution, for the legal validity, the company have to send these copies to ROC. Okay, be listen carefully, students. Whatever change the company makes within the company, either board resolution, ordinary resolution, or special resolution, for getting legal validity, they should send all these forms to ROC. Okay, only after sending to ROC, only after getting approval to the ROC, they can change in the MOA and they can implement it. Okay, so the ROC's validity or ROC's approval is very, very, very important. For example, in a college, if you want to conduct a program or if you want to conduct a test, you will take the permission of head of the college, right? Like principal. In the same way, in the Companies Act, for whatever change the company have to make, they need to take the approval of ROC. ROC's approval is mandatory for each and every change which you make within the company. Okay, next, in that way, there is also for registered office clause. If you want to shift the registered office from one place to another place in the same city, from one city to another city in the same state, or from one city to another city where the state having the same jurisdiction of the ROC, or from one state to other state, you have the different set of provisions, and you need to please try to follow these provisions. These are very, very important provisions for the altering the registered office clause. Okay, the registered office clause will also be called as a domicile clause or situational clause. There are three different names for it. They will call either they say registered office clause, or they might say domicile clause, or they might say registered office situational clause. For all same thing. Okay, they may alter the name, so don't get confused. Try to learn that. Okay, so accordingly try to learn for each and every provision. There is each and every resolution. Please, you need to follow that. Okay, next one. For the next, very, very important is for altering the objective clause of memorandum. What is this objective clause, ma'am? If the company want to start a new object, or if the company want to start a new type of business, they can start directly without making any alterations. No, then it will be treated as an illegal business. In such case, what the company have to do, the company should conduct a general meeting and pass a special resolution when they want to start a new business. Or here one more example. Company wanted to start a cloth business. For that, it issued a prospectus and it raised a funds of 10 crores. And it used only 6 crores for cloth business and 4 crores are remaining. The remaining funds are remaining. Then company want to start a new business along with that cloth business. In such cases, if the company want to use the remaining funds of 4 crores, it should conduct a general meeting and intimate the same to the shareholders that we are wanted to start a new business because 4 crores amount is remaining. In such case, they should make pass a special resolution and make a change in MOA, and the same should be intimated to ROC. In this, for the purpose of altering the objective clause of memorandum. Okay, so in the same way, the company will change its capital clause, and the company will also change the liability clause. Okay, next up, the company want to alter its AOA, articles of association. Okay, just a minute, friends. Just a minute, friends. Okay, sorry for the interruption. Next, all articles of association. As we all know, articles of association is this particular contains the rules and regulations for the internal management of the company. Okay, in these particular articles of association, you have so many provisions relating to Companies Act, relating to dividend, relating to capital, and relating to shares, relating to the proxies, the buyback, all these aspects we will have in this particular articles of association of the company. And if the company want to alter the articles of association, this can also be happened by passing a special resolution in the general meeting. Okay, so articles of association can also be altered by passing a special resolution. Okay, so, however, here very, very important aspect you have to remember is, before altering the articles of association, you should see that it is not inconsistent with the provisions of MOA and it is not inconsistent with the provisions of Companies Act. You cannot alter as the way. See, for example, for a public limited company, you will should have 7 members as the persons to start a company. Okay, you cannot alter your articles of association saying that it is sufficient if we have 6 members we can start a public limited company. No, because it is inconsistent with the provisions of Companies Act. So in such a case, those acts which are inconsistent are called as an ultra virus acts, because they're ultra virus in the provisions of MOA and provisions of Companies Act. Okay, so you need to carefully understand, and well, especially when you are altering the AOA, you should also compare with the MOA and Companies Act and see that it is favorable with MOA and Companies Act. Otherwise, if it is inconsistent, if you alter, that alteration would be considered as an ultra virus. As I have already told you, there are in the schedule 1, there are different tables for preparing MOA and AOA. For AOA, table F, table G, table H, table I and J are given for the purpose of preparing drafting AOA. You should prepare the AOA of this particular company. Suppose company limited by shares, table F is necessary. You should follow table F for the purpose of preparing AOA. These tables have to be mandatorily followed by these companies at the time of drafting MOA and AOA. Okay. So these are the very important in this particular topic. What are the contents of MOA and how to alter the provisions of MOA, and what is AOA and what are the contents of AOA, and is it possible for altering the AOA? Yes, it is possible, but when you alter, it should not be inconsistent with the provisions of MOA and AOA. Okay, so these are the important aspects. Next, let us come to the last part of this particular topic called as ultra virus. What is ultra virus? Ultra virus means what is meaning of here virus? VIRUS, not friends. It is VIRUS. Ultra virus means beyond the power specified in MOA and AOA. Okay. In this particular case, whatever act the director of the company performed, the act should be within the provisions of Companies Act and MOA and AOA. If he does any act which is beyond the powers of MOA, such acts are called as an ultra virus acts. Okay. So we have a few case laws relating to that particular ultra virus acts, and very important, and those acts will be considered as void ab initio. You cannot, they will not be valid according to the provisions of Contract Act or Companies Act. Okay. Now, see here, doctrine of ultra virus. Doctrine of ultra virus. Why it is doctrine? What is the meaning of doctrine? Doctrine is nothing but a principle, rules and regulations. In order to protect the investors of the company, these doctrines have come into existence. Okay. These what does this doctrine says? This doctrine says that if the director or the member who operates the business, who conducts the business, if they do not follow the provisions of Companies Act, if they do not follow the MOA, because of this, company will suffer loss, the investors will suffer loss, therefore they should be punished. Therefore they lay some rules and regulations for proper management of the company. Okay, so these doctrines, the next 2 important doctrines are doctrine of constructive notice and doctrine of indoor management. I'll explain you these 4 doctrines. They are very important doctrines. Okay. What is doctrine of constructive notice? As you all know, this MOA and AOA are 2 important books prepared by the company at the time of incorporation, are kept in the registered office of the company. It is a duty of any shareholder or any third person, whoever is entering into a contract with the company, to read this MOA and AOA properly before entering into the contract, right? Okay, so for example, if you want to go and join in some school or college, what do we do before joining that school? We will bring the brochure, or we'll ask the feedback from some other persons regarding the school, or persons who are studying in that school will take their feedback, and if we know properly the school is nice or the college is nice, we'll join in that particular institute. In the same way, if an investor, before investing in a company, or if a third party before entering into the contract, it is mandatorily rule, or it is important for them to read the MOA and AOA thoroughly before entering into the contract, right? What the Companies Act says that they assume that these third party or the investors have read MOA and AOA thoroughly and entered into the contract, so that they can avoid the risk, or they can avoid the fraud which would happen in the company, right? So without reading MOA and AOA, if you enters into the contract, if something wrong happens and if you suffers the loss, then there is no relief granted to you from the company. Company is not responsible for your loss. or company will not take any liability because you have not read them properly. This particular doctrine of constructive notice is explained with the famous case law Kotla Venkat Swamy versus Ramurthy case. It's a very, very important case. I will explain it. In this particular case, what they have mentioned is in the AOA of the company, it is mentioned that it is mandatory for all the documents of the company should be signed by three major persons of the company. Okay, all the documents of the company have to be signed by the three major persons of the company. Who are those three major persons? Are the managing director, the company secretary, and working director. If the documents are not signed by any one of them, then the document is void. It is not valid document. Okay, it is specifically mentioned in the AOA of the company. Okay, the person here in this particular case, the person Ramurthy, who is giving a loan to the company. Okay, he is giving a loan. This is a financial. He is giving loan to the company, and he is going to give a mortgage loan. What is the meaning of mortgage loan? He is giving money to the company on credit, and company is giving as its asset as a security. So they have to prepare a mortgage deed. Okay, this particular deed is to be signed by the three important persons of the company. Who are those three important persons? Managing director, company secretary, working director. Because it is a requirement which is specified in the AOA of the company. Okay. Now you tell me one thing. The third party, the financier who is giving loan to the company, is it necessary for him to read MOA and AOA properly and carefully before entering into the contract with the company? Yes or no? Yes, it is very, very important for him to read those both books. Now, okay, he entered into the contract. But what he did not read thoroughly MOA and AOA. He just go through them. He did not read all those provisions. At least you should see the provisions relating to documents also. Minimum at least documents in the AOA, whether it should be signed by whom, whether it should be signed by 1%, 2%, or 3%. That also he did not read properly. He entered the contract. Now on that particular day, these directors, what they did in this particular case, it is not signed by the managing director. It is signed by only two persons, working director and the secretary, and one person have not signed it. Okay, it is whose mistake now? Now this particular third party have to verify whether it is signed by three persons or not. He also did not verify properly. Okay, it is not even properly verified by. Now after so many days, after so many days passed on, the company happily converted this. He stopped paying him the money, and the company went into liquidation. Now, what this particular financier took this particular document, mortgage deed, went to the court and filed a case against the company, saying that company went into liquidation. Now, I want the company's asset because I have mortgaged it against my loan. I want to sell it and take back my money. Now, tell me, is this mortgage deed would become valid or not? No, because it is not signed by the 3% as required in the AOA of the Companies Act. It is signed only by 2%. Now, what the court says, in this particular case, your debt have been converted into an unsecured debt because your mortgage deed is not signed by 3%. It is signed only by 2%. Then this financier cannot plead his innocence. He cannot ask, saying to the court that no, this is totally my mistake. I could not. I could not read properly MOA. So please excuse me this time. Next time I'll be really careful and see that my debt have been cleared. What the court says that it is your problem. It is your mistake. You did not read MOA and AOA properly. Therefore, the wrong had happened. You have to suffer the loss. The company is not liable for your debt. You will be treated as an unsecured holder only, unsecured creditor only. You cannot touch the assets of the company. Okay. So therefore, this doctrine is also called as negative doctrine because it is not in favor of third party. Okay, so it is also called as a negative doctrine because what this doctrine specifically tells that you should read MOA and AOA, enter the contract. Without reading, if you enter, the loss you should only bear. Nobody, the company is no more liable for your loss. Okay, so this is what this doctrine says. Now you can ask, ma'am, this is so unfavorable, no, ma'am. So this is like a partiality towards the company, no. So therefore, in order to overcome this particular doctrine and another doctrine, it's an exception to doctrine of constructive notice. That is, doctrine of indoor management have been started. Okay. So fine, friends, the next important last doctrine for today, we will discuss about doctrine of indoor management. Very, very important doctrine. And this particular doctrine have three names. If you can call this particular doctrine as truncated case, This doctrine will also be called as an exception to doctrine of constructive notice. Okay. This doctrine, what this doctrine says, very important rule. You have to read carefully, remember carefully. Mandatory question from this doctrine, say the doctrine of constructive notice or doctrine of indoor management, you will get. Okay. Now, in this particular doctrine of indoor management, what this doctrine says, okay, fine. Companies, the act is saying that you read properly MOA and AOA and enter into the contract. Okay. After reading this MOA and AOA, if a third party enters into the contract, and still he suffers the loss because of internal irregularities happening in an organization, then who is liable? Who will be liable? Okay. You have to remember this carefully. Okay. Okay, ma'am. As a third party, I have read MOA and AOA. I entered into the contract. I asked the directors what all things have to be happened. They told me, but later on they did not follow. Because of that, I should suffer. Is it reason for my loss? No. In such case, what this doctrine says, it is just enough or sufficient for the third party to read MOA and AOA and enter into the contract. Okay. Even though after reading MOA and AOA and they entered into the contract and they suffered the loss, now it is the responsibility of that particular company and the directors to repay the loss to the third party. This is explained in truncate case, rule of truncate. Okay. Doctrine of indoor management is explained in this particular case. In this case, I will tell you. Royal British Bank versus truncate. In this case, truncate is a financial. Royal British Bank is a company. In this company, they had told that if company want to borrow funds on bonds, okay, they need to pass a resolution in the general meeting and they should borrow money from an outsider. Okay. This is the rule which is given in the AOA of that particular company. Now, these directors of this bank went and approached truncate for money. Truncate asked for their MOA and AOA of the company and he read thoroughly and asked the directors. It is mentioned in AOA that your company have to pass a resolution, take the approval of shareholders before borrowing money on funds. Did you pass that particular resolution? Truncate asked. Then what the director said? No, we will pass it. We have already declared date for conducting general meeting and passing the resolution. Now we need urgent funds because we are going for a proposal. So please grant us funds. So it is our responsibility to pass the resolution. They have given this bharosa to the truncate and they went and borrowed the money from truncate. Okay, what did truncate thought? Definitely it's the responsibility of directors. They will do that. And I have inquired them and my duty is over. And he gave money for the directors. Now, what these directors did after a few days, they forgot to pass the resolution or take the approval of the shareholders. Okay. Now, the company also goes into winding up. Truncate went and filed a case against the company. That company have not repaid funds. Now, tell me whether truncate would get protection out of this particular doctrine or not. Okay. Yes, the protection is given in this particular doctrine, saying that the truncate have read properly MOA and AOA, but because of internal irregularities, the company did not pass the resolution. It is not mistake of truncate, and therefore truncate will get protection and he will get his funds back from the company. Okay. So this is all about doctrine of indoor management. What this doctrine says is the outsider or the third party is not responsible for internal irregularities happening in the company. That is why this doctrine is called as a positive doctrine. Doctrine of constructive notice is a negative doctrine towards the third party, and this is a positive doctrine towards the third party. But however, okay, keeping this as a positive doctrine, you cannot take it, the third party cannot take it as an advantage and mingle with this directors and cannot cause any fraud to the company. Okay, these doctrines and these statutory provisions are kept under the Companies Act in order to protect the interest of the investors and creditors of the company. Okay, so friends, with this I will stop the class today and we will meet in tomorrow's session, and remaining prospectus and other chapters we will cover. If you have any doubts or queries, you can message me to this particular number which I have given on the screen, and I will try to solve your questions or queries through WhatsApp messages. Okay, thank you for giving me this opportunity.
Thank you, ma'am.
Okay, thank you.